Hey everybody, we are here with Mr. Tim Vesh. You might know him as Vola Trades, but to us he's Tim. What's up, man?
Yeah, what's going on? How are you, Josh?
Pretty good. I guess we'll let a few people just roll in here, the
Yeah.
latecomers. Make sure you guys like the stream, and if we hit at least 50, 60 likes, we will open up a link and we'll do a giveaway.
Oh,
Everyone loves a good giveaway.
I
I
sure
see.
do.
I feel like your desk has changed orientation a little bit.
Yeah, I think last time. No, I don't know. I don't know. It's a good question, actually. I'll
Okay,
put you over here though,
maybe the
so I
fish
can look
moved.
at you. No, fish haven't moved.
Fish haven't moved.
Maybe the camera. No, it hasn't been that long, has it? Where I had the
Maybe it's
camera
just mirrored.
up
Maybe you
here.
mirrored it.
I
I
don't
don't know.
know.
Interesting.
I'm curious now. The last time I was on here, if because I mean I did recently change it, but this was months ago, so I don't know. I don't know.
Okay, maybe I'm just not up to date.
Yeah, Josh, you just don't watch me enough. Shame on you.
My bad. So yeah, I guess let's just get into it. So you are currently in our sim brokerage account, right? How's that going?
Uh, it was going great. I'm actually going to refresh because I feel like that number isn't right, or I don't know. Maybe it is. I don't know. Yeah, I this is it in a nutshell. Passed the eval, got into the sim brokerage account. Was kind of steady going. I had a bunch of accounts spread across different props, as many people do. But then I was like, you know what? I want to focus on the futures desk. And as you can see, I was doing pretty good. And then I think I got a little impatient. I was like, I'm so close to target. Let's just get there. And took two bad trades, which we can talk about. It was this week. It was Monday and Tuesday. So can show you exactly what I did wrong, what I shouldn't have done in the first place, all that good stuff.
Sure.
But I do think when you get close to a goal, especially one that you start to feel confident in your process, especially if it's been working, that you start to maybe do a couple things, pushing the boundaries a little bit, and every once in a while you pay for them, and that's exactly what I did the last 2 days. So
Yeah, we've seen that a lot lately in sim brokerage. People, they get off the rails that we've given them in the assessment, and then they get to sim brokerage, and then something triggers. Usually they don't last like you lasted, where you were making it nice, kind of upward grind. But that 70% point, 60% point, people kind of feel there's the finish line. Let me kind of lean on my success, my recent success, and yeah, I see exactly what
yeah,
happened there for sure.
I don't know if this is on my end, but my charts are being really kind of slow here.
Hmm.
I'm gonna keep scrolling though. Let me zoom out. It'll be easier to scroll. But yesterday at the open, we had a nice down move. And for anyone that doesn't know my strategy, I'll tell you guys real quick, as easy as I possibly can. But these outer bands that you see, these are actually the Keltner channel. It's the Keltner channel indicator. Call them bands. A lot of people think Bollinger Bands when you say bands, but they're not. These are designed more to help see the actual volatility of the market. So if you ever go to market open, usually you'll see pre-market, the bands are pretty constricted, and then you get all the volume coming in, as you can see down the bottom here at the open, and the bands will start to expand. And I'm basically looking for a move into these bands. And the idea behind it is when the price gets into or near the bands, I always use this rubber band on my desk as an example. So we got a rubber band. If you take this and you just drop it, there's no snap there, right? It's just a flaccid rubber band. Bloop. And so what happens if you start to pull the rubber band? You get a little bit of a tension and you get a little snapback. Well, what happens if you really start pulling this rubber band? Right now, imagine this is a candle on the chart. We'll just turn it this way. If it's right here, it doesn't do anything. If you start to go here and you let go, you get a little snapback. Well, what happens the further you pull this rubber band? the harder it's going to snap back. That is the ideology behind my strat, which is the further and quicker you can get a move in one direction, the more likely it is going to pull back in the other direction. So what I had been doing, this is actually yesterday. Let's go back to the day prior.
And I think most people are used to seeing the Bollinger Bands and not the Keltner channel.
Yeah.
And the Bollinger Bands are based on, hopefully I don't get this wrong. The Bollinger Bands are based on price movement and a moving average and
Correct.
a standard deviation around that moving average, where the
Correct.
Keltner channels are based on something similar, but it's based on ATR instead
Correct.
of price movement.
Yep. You got
alone. It. Yeah. So when you think of it that way, it's still the same rubber band analogy, except for it's looking for a big expansion, and so much expansion that it gets to a point where he might statistically say that, you know, expansion is going to reduce, and when expansion reduces, you see some consolidation, you might see some pullback, and that's where he's looking for his trades.
Yep. I mean, nothing's 100% in trading. We all know this. If you've been around long enough, people that say they have something 100%, just start ignoring them and don't ever talk to them again. But it's all about putting the odds in your favor, right? It's about finding a setup where you can produce good odds, and you then take those odds and you start applying risk to it. And I mean, that's essentially what every strategy is doing. No matter if it's a high win rate strat or 50% win rate strat, it could be a 20% win rate strat. But as long as you're producing the right risk to reward based off the win percentage of that strategy, then you're good to go. But so here was Monday's move. Typically I would wait 5-10 minutes into the open. And again, like I said, I was getting a little impatient because typically when you get a nice little move at the open, 1 or 2 candles, you'll get like a snapback and then a possible continuation. But Monday decided to prove us wrong. And I typically look for previous levels of consolidation as well. So I had this level right here from pre-market marked on my chart at 574. This is like really being slow, but let's see if we can draw this line here. Right there. So I had this marked off. There was one under it too. Not exactly sure what that was from, but so when we pop through here, in my head, I'm like, all right, we're up to around 90. We'll probably use 600 as a resistance. I'm looking for a pullback just to that previous resistance area, and then it can do whatever it wants. That's my trade. I'm just looking for big, quick moves through key areas and then a retest. That's all I'm looking for. But when you're at market open, every once in a while you get shoves in one direction, and it can haunt you. So I do have a daily max loss here on TFD. It's $1,700. I was only using, I think, 3 MNQ contracts when I first started this position, but I started it way down here. I have no problem scaling into a position because, again, think of the rubber band. The further this thing stretches, even after I get in, the higher odds it's going to pull back. And so I have no problem scaling into a position if it continues to go against me, because I know that the further it goes against me and the quicker it goes against me, the odds are we are going to get that pullback. Doesn't always have to happen, as you can clearly see. But the reason I ended up losing in this trade, which I'm going to get to, is because I started it too early. And if you kind of want to zoom in a little bit, at the open, you should really be looking for a bigger move to begin with. Should my start have been on this candle as we got closer to the bands? Yes. Where did I start it? Way down here. And that just comes from, honestly, the last couple of weeks, I was just being a little impatient because we weren't really getting a lot of moves into the bands. So I started starting trades a little bit earlier, and it was working. And what happens when a bad habit works for a little while? You start to lean on it a little bit. And I was talking to Josh about this before the show started, but had I waited, and started this correctly and I scaled into this, I would have been perfectly fine. But I ended up literally hitting my daily max loss at 717 and like 717.75, and the top of this candle ended up being, where is it? 722.25. So what was that? Not even 5 points after it made a 60 point move or so.
It's
So
probably the market makers were watching you stream,
yeah,
and
for sure.
they
They're like, well, I know
for sure
exactly where
that's
his
what it
stop
was.
is. Yep. But had I waited, for a better first entry, I would have scaled in and we would have got the pullback and everything would have been fine. Unfortunately, that's not what happened. I think my second entry was right here at the top of this candle, didn't get the pullback. I think I added one more time. I think I actually got one more somewhere in this last candle. And then it literally just came up, ticked me out basically, and then pulled back. And there's no worse feeling in the world. You guys know this. But it happens, right? It does happen. You end up realizing what you did and you try to move forward. You go into your journal, you write about it, you try not to let it happen again. Unfortunately, the very next day, obviously I was done trading after that. Oh, this chart is killing me. The very next day, we do almost the same thing, but in the opposite direction. Now, this one's going to look even worse on my end because we are nowhere near the bands when I start this trade. And you're going to start to see where if I waited for the bands, I would have been perfectly fine. So again, we had a key level right here. Let me make sure I got this clicked.
And you were still banking on the previous couple of weeks. It was still in your head, like, okay, it happened once, but I'm gonna
right.
test
Well,
it
right.
again
If we
because it's been
go,
working. Sure.
yeah, let's go back here real quick. So I had just started trading this account much more aggressively, not aggressively, but I started paying more attention to it. And I was having, I mean, look, I was having solid days. I had, what was this? $800 day, $900 day, another $770 day. So I was trading 3 MNQ and I was literally just doing these scalps like I was telling you, but I was taking them more frequently because I was taking them more aggressively instead of waiting and only taking 1 or 2 trades a day like I was doing back here when they presented themselves and just taking the smaller wins. I was taking 5, 6, 7 trades a day to get, up to this amount. But when we go back and we take a look at this, what I was doing is I was taking a trade, say, on this candle here, but I was getting the retest and it was working over and over again. But what I was doing was forming a bad habit for these, on Monday and Tuesday where we didn't get that bounce, right? And it just continued in one direction for a long period of time. So again, I drew this line because right at the open, we did make a little bit of a low of this current move. We popped through. It was on a nice big candle. So I was thinking, all right, all I got to do is get in. I'll look for my retest. And as you can see, I did pretty much nail the bottom on this candle. And I had my take profit somewhere right around the retest. And as you can see, it did try to give it to me. I didn't go quite far enough. And, this is where my strategy, it can kind of be a 50-50, whether I want to hold on to it, see what it does if it makes a new low, or if I could just cut it at break even, or, just cut it if it didn't give me my fill and it breaks the low here. I tend to lean towards the side of letting it go, but I really should only be doing that if it's already near the bands, because like I said with the rubber band analogy, if it wants to keep going when it's close to those bands, the odds are you're going to get a pullback if it's closer to the bands. This was not anywhere near the bands. So if I would have realized that in the moment, this is something that I journaled after the fact, by the way. And this is, going back and reviewing the trade. What could I have done better? What shouldn't I have done in the first place? All the things that you should be doing after, winning trades or losing trades. But what I always say too, real quick, just to divert, is, what's going to make you as a trader is not the amount of winners, right? You should expect to win. Your strategy was built around winning. What's going to define you as a trader and your strategy is how you lose. And if you can learn to lose, that's what's going to make you a winner. And I know that sounds backwards, but it's the truth. And I'm pretty sure Josh will agree with me on that.
You're dropping so many knowledge bombs. I hope everyone's paying attention. The important thing that you're seeing here is how he's losing is based on, okay, I diverged from my process. I accepted that. I'm moving on. I'm not going to go whine. I'm not going to go complain. I'm going to just be hyper focused on, okay, this only reassures me that my original strategy was more correct and I need to stick to that. And I need to maybe make some slight adjustments to my plan because things are changing a little bit, but he's doing that now with the data he has. He's doing it now with that, extra information he has on where he might struggle to execute and where he wants to be.
And controlled emotion is perfectly fine. Like it's perfectly okay to be upset that you had a losing trade, but what you do with those emotions is what's also going to define you. Are you going to immediately go and load up another account and start trading it just because you took a loss, or are you going to sit back and realize like, okay, like I screwed up, or maybe you didn't screw up. Maybe it was just a setup that was an A+ setup and it just didn't work. Like that happens too. And how you can control your emotions in those moments are what is also going to define you as a trader. Because again, what we just said, how you lose is going to define you, because everyone's going to win, right? We expect to win. Like I said before, that's kind of the easy part, right? Especially when you have a higher win rate strat, like, or even just even if you have a 50% win rate strat, like you're expecting to win 50% of the time. But if you start to see that you're only winning like 35% of the time, how are you going to handle that now? Right? Like that's what's going to define you. Is it just you need a bigger sample size? Is it market structures changed? That's when the real trader in you is going to come out. And that's when you kind of have to, find yourself. But let's get back to the trade itself. So like I said, my strategy is to wait for the bands. I entered here. Where's the bands? It's nowhere near, right? It's almost not even like halfway between the EMA here and the band, right? It's a pretty bad entry when you look at it in hindsight. We end up getting the pushback down. If you believe it or not, on my live stream, I even said, as this candle was happening, this should have been my first entry. And I even told everybody on my stream, I was like, if you aren't in, this is not financial advice, but this would be a good spot for a first entry. And sure enough, like I ended up adding to my position here. So it was a great entry. Had it been my first one, immediately pops 30 points back up. I mean, granted, it didn't continue to move back up, but again, to the bands, big candle. As you can see, this candle was actually bigger than this one, not by much, but you're looking for the big candles towards the bands, and you're typically going to get some sort of movement in the other direction. Obviously, this is hindsight. We're looking at a chart, but again, like I said on the live stream, I literally called it out as it was happening. I'm not saying that it always happens that way, but obviously, if we could all see the future, it'd be a lot easier. But it did end up pulling back again, and as you can see, remember, I'm in my position from all the way up here. I got one ad here, and then I got another ad, I think, right here. And keep in mind, these are just 3 MNQ contracts. And I think on this break right here, this is what took me out, where I ended up hitting my daily max loss. So not quite, a ticker like it was before. It did end up continuing down. And this just moved a lot further. But again, every time we got closer to the bands, what do you see? You see that little knee-jerk reaction and then a continuation of the downside. And then eventually you did get the V straight back up. But I still wouldn't even say that any of these trades are like really good trades, because none of them really like got to the bands. Because if you really play along, like you'll find the best trades are the ones where you're just patient enough to be able to wait for the actual bands to get hit, not hit per se, but like get really close, because that's usually when you'll see those big volume candles, the really big extensions into the bands, and those are just the best trades. And what I'm getting at is I steered away from that, and I took 2 big losses because of it. And it had nothing to do with my strategy. It had everything to do with me trying to trade something that wasn't my initial process that got me to where I was. It was me trying to force trades, because, there was weeks where I would only trade once a week, sometimes just once or twice a week. And I was perfectly okay with that, because guess what? I knew when I took my trades, I had a very high probability of them working. The problem with that is you get a little impatient, especially, when you get the FOMO going, you see other people making money and you want to make money. And so it's like, it's how you control those emotions that is really going to define you. And I happened to let it get the best of me. And this morning, I told myself I am not going to do that. Let me see. I didn't take any trades today. I'm going to try to fast forward as fast as I can with these charts. I don't know if it's just this chart specifically, or maybe it's because I'm sharing it. I don't know.
Yeah, it's probably the sharing.
Let's see. Here we are today. And so as you can see here at market open, well, not right at open, but nowhere really near the bands today. We did get kind of a move down towards here, but this line that's drawn, I don't know where that's from, but it ended up being a pretty good one. I think that was from from yesterday when I just drew that one. But as you can see, that area was being used. It didn't quite get down towards the bands. I mean, look how far away we were from the bands. But so there was no trades for me today. Had I not taken those losses the last 2 days, this might have been a possible trade. And this is what I'm saying was working, and it started to form my bad habit. But look at what it led to, right? That's what I have to realize, is that sure, this might work for a little while, but then, it's going to take out a decent, I mean, I took 2 losses and it took out, what was it, like a week's worth of profits, just because I got a little impatient.
Right.
Had I stayed patient and kept through my process, I don't take those losses. Instead, both of those days are probably green days, and we move forward, and we're that much closer to into the actual live account.
I'm curious. So you, we all make these faults and stuff like that. But when you called it out, I'm curious if that's sort of another plan adjustment you should make. Obviously, avoiding the jumping the gun in the first place is great. But if you're already in the trade and you're getting to that second position and you're telling everybody, now would be the right time to get in. I'm curious if maybe you shouldn't have added at that point. Obviously, again, in retrospect, that's clear. That's obvious. But do you think that's something, maybe if you are in a position like that and you're like, okay, this would be the position. I made a mistake just a couple minutes earlier, so now I'm just not going to add. I don't get that opportunity to add.
It's not a horrible idea, but I think a lot of what my strategy is based on is being okay with scaling into the position.
Mm-hmm.
Because like I said, the idea is if it's near the bands and it wants to continue to stretch, that's just like, if you have the rubber band in front of you again, like it's just that rubber band stretching even further. So to me, the further it wants to go it's just a matter of hanging on, waiting for that snapback. And so I have no problem like scaling into the position. I see what you're saying. Like I shouldn't compound the mistake that I already made, is what you're getting at.
Yeah.
But at that point, I think what was going through my head, like I said, I should have probably cut that once I realized it wasn't working right away, like I had hoped, because I was that far away from my original strategy. That's probably the right play. And I do see what you're saying, but I guess what's going through my head after the fact, in the middle of the trade, which this is great for journaling and going back and kind of going through your thought process, is the only way to get out of this trade is to still scale in as if, I am already in the trade as normal.
Yeah. But I guess I understand that's like the gut reaction.
Yes.
I guess I'm just curious, like, still let it go in the direction that you wanted to. You just don't get to compound it.
I get no.
Yeah.
I totally get it.
You wouldn't want to say get out of the trade and then get back in. That would be silly. So it's more about just not adding at that second point. Anyways,
right.
Just
I think, I actually, so when I used to trade equities, I used to do exactly that. It's actually probably the right thing to do. And I guess just in the moment, that's something that you would have to comprehend, or have already built into your strategy. But I used to, if I got into a position and it was too far behind, at that point, I start to trade the chart instead of the P&L. And a lot of people, will trade their P&L because they're like, oh, I don't want to get it, I don't want to exit this trade red.
Sure.
But what could happen there, like if, let me scroll back real quick, because the current day, not seeing much on the chart today. And I can give you the example that I'm about to give. So I think what Josh is getting at here is, come on. I wonder if it's the beta too. I wasn't having this issue. It might be the sharing, like you said. All right. So I get in this trade here. It doesn't work. I don't cut it. What Josh is saying is, since I shouldn't have been in this trade to begin with, I shouldn't be adding or scaling into the position. I don't disagree with that. It's actually a good thought. When it comes down to here, I think what I should be doing, like he had said, I called this trade out live, where I got in and we got the immediate pop and we went right to a key level of 750, and it started to reverse. That was a good 30-point move, like pretty instantly. And had this been my first entry, it would have been a great trade, right? But I was stuck in the position. What I was going to say as an example is, instead of trading the P&L, where when I get this ad, it brings my average somewhere like around like 65 or so. So when it pops back up to 50, I'm clearly not in the green. What I could do is treat it almost as like a separate trade, to kind of, get back in. So like, say I take a contract here, I add a contract here, even though my average is at 65, instead of essentially hoping or waiting for it to get back up through my average, you could then, as this pops back up and you see it starting to reject, you just take this contract off as its own little separate trade.
Yeah.
Since this was a mistake trade, you almost act like that is no longer there. And then you could kind of do that on the way down as well. So you kind of trade within a trade. And a lot of people do that usually for the good, not for the bad. You know, they'll average into a core. They call it a core. So they'll have like one contract and they'll add a contract. They'll take one off, but it'll, you know, they'll have one. So, and they just call it a core, and you can kind of trade around that. I've never really done that. I mean, I hope to never have to do that. And I mean, this is
I think
definitely
that's
an
for
extreme
sure
example.
your direction is like you're journaling, you're like, you know, you're writing, "Dear Tim, don't, you know, jump the gun," and that kind of cuts out the entire conversation if that is true.
Exactly.
But I do wonder, it's sort of like caveat, you know, if this does happen again, because it probably will at least once, I should just exit the trade immediately and reassess. Once I
I would
acknowledge it,
agree.
it's hard. It's hard. You're in
Yeah.
that trade, and you're like, no, let's, you know, there's still that chance that it goes in my direction. But at that point, you're not trading your strategy. You're trading a gamble that looks like your strategy, right?
Exactly. 100%. Yeah, no, I totally agree with that. And that is the hard part for almost everybody, is willing to accept the loss, right? Because what could have been, like Josh is saying, this could have been, I don't know exactly. We'll just say we'll go on the higher end. It could have been a $200 loss, you know, if I cut it anywhere on this candle, and then we get back in, we, you know, almost make all that right back
Right.
on a better first entry. But instead, you know, what could have turned out to even just maybe a possibly break even day turns into a max loss day.
Yeah.
And it's
And there's
really
also
just a
that
way to
little
do
bit
that.
of, you know, well, if I stay in this and it works and I over leveraged in a sense, you know, or over risked, I'll make
Yep.
even more. So you kind of like, well, maybe I'll just hang on and, you know, let's just let the cards play. And then you start coming up with and I'm not saying you specifically, I'm just saying this is such a common flow as a human. You know, it's going
Yeah.
against you. You're like, oh, let me just push a little more, and I'm actually going to make more now. Forget being worried about losing. Now I'm going to come up with reasons why it will work, and you start convincing yourself like why you should overhold against you when you aren't taking the exact strat. But yeah, you know, hopefully best bet is, you know, you just avoid this from now on, and this was a lesson that you learned, you journaled about, and you're on your way. But
Yeah.
there's
I
always
do
that
think,
imperfection moment that it could happen again.
yeah, for sure. And to be completely honest, to, you know, move on your point here, I think preparing for all those situations is part of your job, right? I say this all the time. If someone were to ask you right now, what is your strategy? And you can't explain everything about your strategy right now to that person, then technically your strategy isn't complete yet. And you shouldn't really be trading any sort of real money behind it. And what I mean by that is, I should be able to ask you, what is your strategy? You can explain it to me, but then I should be able to then ask you, well, what's going to happen if what I just showed you on the chart happens? What's going to happen if it works in your favor temporarily and then shoots down against you? What's going to happen if it goes sideways for a half hour? What's going to, you know, you should have an answer for all those questions. And I feel like this is one of them, you know, situations where I basically explained to you, like, going back, I didn't really have an answer for this situation. It was more of a 50-50 decision. And you really shouldn't. I mean, yes, you can use intuition a lot when it comes to trading, but you should have a solid answer for each and every situation. Now, the reason I didn't have an answer for this situation is because I've never put myself in this situation before, and that's my fault, right? And that's what it always comes down to, is holding that accountability to yourself and being able to go back and realize, okay, I messed up. Like, what am I going to do about it, right? And that's going to allow me to add to my strategy moving forward. Because if I, like Josh is saying, if I do ever put myself in this situation again, I will now have an answer for what should happen, because I can be like, oh wait, I just did this again. I remember what happened last time. This is what I need to do based off of what I did in the past. And again, that goes back to learning how to lose, right? It's all about learning how to lose. And
So true.
I saw a lot of people asking what the settings on my Keltner channels were. So the length is, I think by default, the EMA is 20. and the multiplier is 2. I changed mine to 13 and the multiplier is 4. Yeah, these are the settings right here on the chart. Those are the only 2 settings I've changed. And that's through, I was actually just talking about this on my stream today about how I back tested this for, like, I literally went on the 1-minute chart, which is what I trade. And these, the bands themselves will change if you're using a different time frame. So this is based on the 1-minute chart, but I went on the 1-minute chart and I scrolled back well over a year. I'm pretty sure I went back maybe a year and a half, maybe even 2 years on the 1-minute chart after I got the settings that I thought I liked. And just like that was the amount of time I put into this. I mean, it was like probably 5 to 6 months of tinkering with like the length and the multiplier to really get it where I was or where I wanted it. And essentially what I was looking for was just, where can I get these bands to where every time the candles go down and touch those bands, it looks like it reverses. And if you put these on your chart and you literally, I'm not going to do it on this chart because it's acting funny at the moment, but if you put those settings on your chart and you just scroll backwards, I recommend between 9:30 and 4 o'clock, the New York hours, just find every time it touches the bands or it gets real close to them and look at what happens. It is very, very rare that you don't see some sort of a rebound. It's just kind of how the market works, right? Because if you think of the big guys aren't looking to get in when prices extended one direction, right? They're looking to get in. A lot of times you'll hear the funds like to trade around like VWAP and stuff like that, which is somewhere in the middle. So anytime it gets extended, you think that they're going to continue to push it that way? I mean, they could. I mean, retail could even jump in and, there could be news. That's the other thing. I don't trade news. I try to stay away from the open as much as possible. Sometimes the move is just really good and I'll throw a little bit of risk at it. I do try to downsize at the open if I do take a trade at the open, just because you can get those extra crazy moves in one direction. But anything that's going to shoot the price one way or the other, especially news, I stay away from. I'm looking for that natural volatility in one direction. I'm looking for them to, I'm hunting with the big fish, like I'm looking for them to, look for big stop loss areas and push down through it. And you get that big knee jerk reaction. You extend that rubber band. And then I'm looking for it to, push back the other direction. I mean, it's really a simple strategy when you break it down. As you can hear, my son's calling, but I'm busy.
Okay. He has a question about the Keltner channels.
What? Say that again. Spell astronautical. You're gonna make me look stupid. No, get out of here.
In the chat spell astronomical.
All right,
astronomical.
Yeah. Spell astronautical. Nautical or no?
Oh, astronautical.
Astronautical. All right, I'll try. Astronautical. A E R S. Am I right so far or wrong?
And I can tell you too.
Ash. Or wait, no.
I think we got it.
That's right.
There it is on the screen.
TR. Oh, yeah. Oh, Ash. What did I say? Oh, I put an E in there. Yeah, okay. ASTRONAUTICAL.
Is he applying to the...
That looks right.
Is he applying to the engineering program at MIT?
ONOMICAL.
Where did you get that from? Yeah, where'd you see that? Because that's not right. You're even missing the R in there.
Astronautical.
That's not how you spell
There's
it.
no R.
There's an R in there.
Astronautical.
There's an R in there. All right, come on. Gotta get back to work.
There's no R.
There is an R. He's asking Alexa.
Yeah, there we go. Don't trust daddy.
Don't trust daddy. I was thinking of Arrow, like aerospace. Astro.
Yeah, I think it is. Astronautical would be still.
I know, but I put an E in there instead of just going straight to the S.
All
right.
Okay, I think we got enough likes here. So, Raj, you drop that link, and we'll do the giveaway.
Okay.
That's Tim's prop desk over there. The traders are getting out of hand over there at Tim's prop.
Well, Rob, my mom and my dad, they got together on New Year's Eve when they were 18 and 19.
Oh, wow.
And they said, you know what? We're just going to make a handsome baby.
Yeah, they can't help it.
I mean, they just knew what they were doing. You ready for Thanksgiving?
All gearing up. I'm staying in town. Got family in town, so.
I want to try something real quick. Yeah, we usually have family over our house, but this year my brother wanted to host, and he got sick. My niece got sick, and then she got sick, and then he got sick, and now they're not hosting. So now we're actually going up to my grandmother's house to do it up there. I think it's the beta actually, because now I'm on the non-beta and the chart's working fine.
Okay, well, that's good to
Just
know.
FYI.
Yeah, we'll see what happens when we stop the stream too.
Yeah, because see, like now I can drag it normally.
Same browser.
Same browser, yeah. I just logged back into the normal.
Yeah, I'm on the beta on mine as well. I'm not having any issues, but I did just get a new machine, so.
Whoa, bro! I got the most top of the line machine there is. Okay.
All right.
Well, is it CPU based?
Is it
or
that
GPU
fish tank
based?
back there?
Yeah, I have it in there. It's water cooled. It's in the fish tank.
Oh, okay, that makes sense. They're boiling when you see the fish boiling at the top of the fish tank. You got to close some charts.
Yes, length 13, multiplier 4. Everything else is the same.
And he goes back and he does those back tests, and what he's looking for, of course, are false positives. And what I would definitely suggest to do when you do that is not just think, oh, look how much this works, and you go through 10, 15 charts and you go by the your feeling of this seems to be a working strategy for me, but you actually dig in and go, okay, when it doesn't work, where am I risking, right? And how does that play out over time? That's so important, and it goes back to his point.
Yeah, and that's what plays into that's when you start getting into position sizing based on the current range of the market. Because as we know, what was it, last week or 2 weeks ago? I mean, we had a day where we had 200-300 point candles, let alone 200-300 point days, just because of the volatility that was going through the market. So, if you're trading 3 MNQs as a starter on a normal day, on a day like that, you got to go way down to, 1, just to get anywhere near the volatility or get anywhere near the sizing that you're supposed to be at. But I will say, like here, is this during the day? No, this was in pre-market. But as you can see, like you kind of have like this dribble down, and then you sort of get near the bands, but then you get the actual move, right? Like look for those big candles that are bigger than all the rest before it, that go into the bands themselves. And if you look for those, that's the moves I'm looking for. I'm looking for that rubber band to really stretch. And that's when you typically get the reversal. Like here's an example. I mean, and this is what I did. And I did this for months. I mean, months when I first came over, because I had a strategy that I was trading, but I didn't feel like it was a very long-term strategy. It was an opening range breakout type trade. I knew that I would never trade that on a real account just because of the risk associated with it. So I started looking in the background at the same time, and this is what I was doing. So as I was trading that strategy, and I got a couple payouts here and there, but it was nothing I knew was going to work long term. I was looking for something that I could trade long term on a test account, etc.
Yeah.
So
and forgive me if you already mentioned this, but obviously the bands are your biggest portion. You do look at levels. That kind of gives you some confluence on trades. Is that how does that change your decision making? And then for actual entry execution, are you looking for a little bit of retracing to start moving in your direction, or does that not matter at all? It's purely about the price point.
I wouldn't even say it's necessarily more about the price point, more so than like the move itself. And this is going to be a little bit more on the advanced side. And this really only comes with like years and years of staring at the charts. But I do, at the end of the day, consider myself more of like a price action trader. So when I start to see a move in one direction, I was literally just talking about this on the stream this morning too, which is kind of funny because I haven't talked about it in a while. But like a lot of people have up the time and sales and stuff like that. Now, I do remember this move, but look at how this never touches the bands. Like see how we like kind of get close, but we're kind of grinding. None of these candles are bigger than the others, and we just kind of grind in one direction. And look at what it did that whole morning. It just kept grinding. We never really got that big extension to the downside. So that's something I would stay away from because there's not good news. But then you get something like here where you get that short burst. This is in the pre-market, but again, you get that short burst kind of right up into the bands, way bigger candles than prior. And look at what happens. That could have been news. That was at 8:30, so we probably wouldn't have traded that anyway. But so what I was going to say is with the price action, as far as looking for entries, I like to call it the wiggle or the jiggle, whatever you want to call it. But basically you'll get, I'm just going to use this one as an example, but it might not have actually happened. But so when you get a big move in one direction, think of the time and sales. For a candle to go straight up like this, and it's a big green engulfing candle, what's going to be on the time and sales, right? It's going to be like green, 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 green. There's obviously going to be some red sprinkled in there, but it's obviously going to be 95% green, because in order for this candle to go up, what has to happen? People have to hit the ask, right? So if they're hitting the ask over and over again, you're going to see green on the time and sales. Well, over the course of, I think I'm coming up on 8 years now of staring at the charts, you start to see, you can see the time and sales in the candle. Like you don't need the time and sales up to see what it's doing, because you can just see it in the candle. Now, when you get to what ends up being like the top of a candle, what would happen on the time and sales? It would slowly stop to be all green, and you're going to start seeing some red pour in there, right? Because what has to happen on the time and sales for the candle to go back down? Red has to start coming in. So you start to see that stuff inside the candle, and you don't need the time and sales anymore. And I do recommend, having the time and sales up if you really want to see this and kind of what I'm talking about. But over time, you're going to start to see when it's starting to go straight up like this, up, 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 and then it's going to start to slow down. So like you're going up, 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 and then it's going to start going slower and slower and slower. And then you're going to start to see the sellers kind of start to overtake the buyers. And then that's what kind of stops. And then you start to see this little fight at the current top of the candle. And that's what I call the jiggle. And at that jiggle is typically when I try to enter a trade. Now, keep in mind, I'm only entering based off that information of the jiggle at the price, reading that price action after it's met my other two, requirements, which is near the bands. And I'm looking for the big extension candle. Like if I see a big extension candle into the bands, then that's where I'm looking for an entry. I'm not going to get in just because the price hit the bands, because who knows if this is like some news that just came out and like middle of the day news, and that thing it goes in the price discovery mode, and who knows where it's going to go, right? A lot of people might just be selling and creating a false jiggle because they don't know that the news is out, and they're just like, holy crap, price spiked, I'm going to get out. But in reality, my cursor's at 24,905. It goes in the price discovery. This thing might go up to 26,000. Who knows? Right? We don't know with news, because once news hits, I don't like to trade it based off of any kind of volatility, because once it goes into price discovery mode, I don't know where that price is, and I'm not going to guess either. I always try to say I try to react to what the market's doing. I don't try to predict what the market's going to do. And to me, that I don't know, that's a big one for me. Because people always ask me all the time, like, what do you think the market's going to do today? I'm like, I don't know.
People love to talk about prediction though, and they go, look, I told you it was going to go up, it was going to go long. It's like, cool, that's not a trade.
Right?
Yeah, you have to react. That's not going to help you in the long. I mean, it's great to have increased probability, and you're looking for that, and you want to be right as much as possible. But in the end, it's Gary over at Goldman dropping a bomb randomly in the middle of a trade, and you're like, oh, my prediction was wrong. It's like, yeah, because this isn't just math. There's more to it. It's actual market participants, and a random order could come in needing to be filled, and everything can change in an instant.
Real quick, this is for Zishan.
Okay, and we're apparently supposed to show your legs. So,
oh yeah, I forgot about that.
We get a lot of legs
once on stream, and they want me to start OnlyFans and everything. It's crazy.
Oh no, 6-7. Okay, we are running a 6-7 sale right now. 60% off EOD.
Oh, 60, 70%. 67.
Someone mentioned it. Yeah, exactly.
That's hilarious.
And 70% off static accounts. So
my kids drive me nuts with that. Yeah. Market trend ES. What do you mean? How many modes? OMHV is getting impatient. He said, "Spin it. Let's go."
All right, go ahead and spin it, Raj.
Oh, you didn't have to. I was gonna say make them wait, but
Yeah, I think we already made everyone wait.
yeah, that's true. Don't want to ask for feet picks.
No, we're not doing marbles. I don't know how you do that. That takes like an hour.
Nah, that'd take that long.
Raj's computer almost crashed last time because we had so many marbles.
That was fun.
I'll let you say the name.
Zhang, the D
There
side.
you go. And let's do one more.
What is this for? I don't even think we said.
$200 credit to the desk.
Okay.
And this is another $20 credit.
Anyway, right? Or are you not doing that anymore?
What is that?
Doesn't everybody get something for entering, like couple bucks?
Yeah, let's do it. We'll do $20 to everybody who entered if you didn't already have a credit
everybody.
in the same fashion. There you go. That's an easy one.
Yeah. Is that Guna?
Guna.
Raj Kumar. Oh, that was easy.
There you go. Yeah.
Raj Kumar.
Congrats to you two and everyone else who hasn't got a credit before. That's been a part of one of these. Will get $20.
Wait, that was Raj.
Oh, different Raj. Yeah, we're also running this as well. So all the resets are $25 less. But hopefully you don't have to use it. And if you're in drawdown, don't just reach for a reset. Learn to handle drawdown like our buddy Tim here, and just keep moving forward on your strat and recover.
Yeah, I like to tell everybody too. When you take a loss, don't look at it as a setback. Just, I mean, because all it is, I mean, it is a setback, right? But look at it more as it's just lost time. Because if you stick to your strat and you know your strat is profitable, if you continue to trade your strat over the long run, the numbers will play itself out. But if you start getting in your head, you know, after a couple losses and you're like, oh man, my strat doesn't work anymore, you're going to start tinkering. And, you know, I've been there. Some of my friends back in the day when I was trading equities, they used to call me Tinker Tim, because
we still call you that. We still call you that over at TFT. Yeah. No, I'm just kidding.
But you know, that's a problem a lot of people have, is like they have one bad day and they know for a fact that their strat is only like a 75% win rate strat, but they take 2 or 3 losses in a day and they start freaking out like, oh, I need to change something. No, you just had one day where things didn't work out. You know, get back on the horse tomorrow, you know, go for that day. And
this isn't like everything else in life where you're fixing a plumbing issue or something, and as long as you get it once and you fix it, then it's done, and that's the way you fix it from now on. This is more like, working and leaning on statistics and knowing that the pipe's going to keep breaking, and you have to know that you have to keep fixing it the same way, and it's not going to work 100%. It's really hard. It's a struggle to keep yourself in those statistic mindset when we're so used to being people that just keep working on something until it just is fixed and then it's 100%. And it doesn't work that way with trading, and it's hard. It's really hard to stick with something like that because there is a valid reason to change your strategy. It just can't be only based on your recency bias, aka the last week of trading. That might not mean that your strategy is broken if you're executing appropriately. It might just mean you're having a week where your luck isn't in your favor.
I have a buddy that is still trading equities. He has gone through a month where his strat showed signs of not working, but he would stay with it. And when you know it, after a certain amount of time, it just starts to work again. Like the market's the structure of the market is going to change here and there. And your strat might go through a little bit of a downswing. But it's really just a matter of, if the numbers are going to work out in your favor in the long run, you just got to stick with it. And you'll see a lot of traders, and I'm sure Josh included, where it's part of the game, right? They can show you stats where they went through downswings, but they'll show you, on the big picture, that overall P&L curve that looks like this, there's going to be little notches in there, right? Where it goes down and then starts its way back up. Like it's just part of trading. And the sooner that you can kind of realize that that's just part of it, the quicker you can stop trying to possibly tinker. Because the thing is, if you tinker with just one little thing, believe it or not, that changes everything, right? You're not just changing one little thing. And it could be, in the end, like if you're back testing or trading in general, like testing on a sim account, etc., and something's not working, you could be changing something for the good, but you should only be doing that after a large sample size. What would you consider a large sample size, Josh? 3 months, 6 months? Like it's something on the bigger side. It's not.
Yep. 3 months, 6 months, I would say for sure. And you're going to want at least 100 trades, I would say would be a minimum.
Yeah, that could be a good factor too, just in the amount of trades. But you can't, like, after, a day, a week, not even a month, where you're, take 20, 25, 30 trades and you're like, okay, this isn't working, because your sample size just isn't big enough at that point. And that's why when I back tested, I already had an idea of what I was looking for, because I essentially took my strategy from when I was trading equities. And I felt like it kind of dried up a little bit in equities, so which is kind of why I switched over to futures. So I knew what I was kind of looking for. I was looking for something very similar. So when I was back testing, I already knew I had a little bit of a head start of what I was looking for. So I essentially, but I went back and simulated through back testing almost 2 years. I want to say it was like a year and a half, almost 2 years worth of trades. So I didn't just go back, a week. I didn't just go back a month. I didn't just go back 3 months. I went back almost 2 years of looking for trades on a chart. And I mean, you can imagine, it took me like 5-6 months to do that back testing. It took a long time. And I remember it would get slower and slower the further back I went, because of all the data that it was like saving into the chart. But that's something that if you want to make this work, that's the kind of shit that you got to do. Like, you got to put in the hard work. It's not, I know a lot of people that have been doing it for a long time make it look, it's as easy as clicking 2 buttons, but there's a lot that goes into clicking those buttons, when to click those buttons, why you're clicking that button. Like there's a lot that goes into that you have to almost earn the right to do. It's not just a matter of showing up and, oh, this guy can do that, I'm just going to copy what he does. Well, what's going to happen when he's not there to copy?
Yeah. And you're not going to copy every trade he does. He's not going to show every trade he does on a stream. You're going to make different decisions. You're going to probably, the people that do that end up going, oh, well, last time if he would have just held, he would have made more money. So I'm going to hold while he gets out. Or, all those little differences add up, and all of a sudden he's still profitable and you're not.
Exactly. Yep. And I've seen it happen. I've seen that happen on several, not for me personally, but I've seen people, go into these rooms. This was back in the equity days as well, because that was like a big problem, is people would go into these rooms just trying to copy the traders. And it was like, it would work for a little bit, right? But you would never make as much as they're making, because by the time they exit and it starts to go back, and the time you exit, there's so many little nuances where, unless you learn how to do everything yourself and understand why they're doing what they're doing, when they're doing what they're doing, like, you're never really going to be able to make it successful. Because like I said earlier too, what happens if they don't show up one day? Then what? Or what if they just don't show up anymore? There's always a reason that they're doing what they're doing, that unless you learn it through the proper channels, you're just not going to be able to do it. It's crazy. The psychology, and people will tell you this too all the time, like the psychology behind trading is such a big part of it, because once you have your strategy down and once you know what you should be doing as far as execution, it really just comes down to the psychology of being able to do it, and being able
to stick to it, being able to deal with drawdown when it happens, continue to execute. It's all about, can you become an execution machine? That's what we're trying to be, is try to be 2 people, right? Have split personality, where your analysis guy and your execution guy, and the analysis guy guides what the strategy is and everything like that, and the execution guy makes the little nuanced decisions, but he's sticking to the plan. He's not allowed to go back and say, okay, hey, I'm also going to be the analysis guy and I'm going to change all that. Do that later at night. Don't do that intraday during the session, especially. But don't also just view the last few trades as the new you, or the new, or that strategy's the problem. Because I don't know how many people, again, like Tim was saying, he tweaks things, or he used to tweak things too much when things weren't going right. Everyone wants to do that. They go, oh, okay, well, I failed. I lost 2 days in a row. This sucks. I better find a new strategy. They kick to YouTube. They try to find the 100% strategy, because they don't want to feel that way anymore. They don't want to feel like they lose. And then that starts working for a little bit until it fails. And meanwhile, what's going in your pocket? Nothing, or negative. You're just losing evals. You're signing up for new prop firms thinking, oh, this prop firm's the one. The rule set is really the rule set that works for me. And realistically, you're just, you're trying to change the things that you feel like you can control. And you're not focusing on the real issue of sticking to a strategy and giving it the room it needs.
And also at the same time, the strategy that you were trading is working. Yeah.
Yeah.
You
Well, yeah,
would've.
you would be like, oh, look, if I would have just stuck with that and didn't spend all these extra hours I could have had free time for, now I'm back in my same boat, and I'm
Yeah,
sitting
there's
here
a
with
saying.
blown
I was gonna
account.
say there's a saying floating around out there as well that there's thousands of profitable strategies to trade. There's just not enough profitable traders to trade those strategies.
Mm-hmm. Yeah, it
Let
makes
that one
sense.
sink in.
I will. I'm
So
gonna go meditate on
it
it.
yeah. You know, I want to like pat you on the head. You're like a
Okay.
little bit lower than me. You look like
I turn the other side. There we
yeah.
go. Here you go.
Pat you.
Oh,
Oh, I gotta go this way. Oh, go back this
no,
way.
he's flipping it to try to fix you. There you go. All right, guys. Is there any questions we want to throw up there? Josh or Dashboard? Yep, thank you. And guys, if you want to join the beta, just hop in the Discord. We'll drop the link for you. It's pretty open beta at this point. Project X still having issues. We didn't have any issues with Project X today, but yeah, I heard there was issues over there.
Yeah, they had a couple issues for like a week there. I think I
Yeah, we
haven't heard
haven't.
anything since they got it fixed, but
Yep, we're still Project X, still working okay for us. So
well, that yeah. So real quick, what Redemption is Fair just said. That's actually a really good point. That I used to say this all the time too. I could tell you exactly where to enter a trade, exactly where to exit a trade, exactly what I'm looking for. I could tell you all that stuff, and people will still find a way to fail because they're going to put their own emotion into the trade. And like Josh mentioned earlier, what they're not going to do is they're going to be like, oh, like, cause so can you pull my chart up real quick? Just I'll give a real quick example. So like say this was to the bands, like the bands are right here and I get in and they're like, oh, I've personally noticed that every trade he gets in, he gets out early because he just scalps, but I've noticed it tends to always go up to the EMA. I'm going to wait for the EMA to hit. Well, right when I get out, because I'm reading price action, I feel like it doesn't want to go higher. It's a key level. It's a retest, whatever the reason I got out, and then it shoots back down against them. I told you exactly where I'm getting out. I told you exactly what I'm going to do, but they want to, everyone's going to want to do their own thing, once they start, and they're going to want to make it their own thing, which is perfectly fine. But at the same time, you can't expect to have the same results when that happens. So it's like you can tell someone exactly what to do, but they're going to find a way to lose, and every once in a while it could work, right? Like in this example, it did work. But they're going to have different results regardless based off of the fact that they're trying to make it their own, which is perfectly fine, because I think if you are going to go to YouTube like looking for a strategy from somebody else, you shouldn't be looking to copy someone exactly. You should be looking for the idea of something that fits your personality, and then you can kind of turn it into your own thing. But you should never be on there like, okay, I'm going to try to, get in when he does. I'm going to try to get out when he does, etc. Like it's just never going to work.
there's a, it's a little. It seems like it should be antiquated, but it's not. But I think it's from the 90s or the 2000s, or maybe even earlier. But there was a trader that was basically saying I could put the strategy that would make you win on a billboard, and no one would follow it, and everyone would still be losing on it, because how you make it your own is so important. And then the other side of that I wanted to point out was, as an analogy, was if you flip a coin 100 times, and I don't know how many of you guys did this in grade school, but if you flip a coin 100 times, your chances of reaching about 50-50 on heads and tails are extremely high. Like if you flip it 100 times and you have that data set, if you mark it down, it'll be like 49-51 maybe, or 48-52, or even 50-50. It's almost, if you had 20 people do that, almost everybody would be in that range. But if you looked at the individual heads and tails, you would see eight you'd see 8 heads in a row sometimes, right? Or 6 tails in a row. And if you think of those as wins or losses, those are the same kinds of drawdown you're going to experience when you have a 50% win rate, like over those 100 trades. So what are you going to do? What are you going to do when you have 8 heads in a row? When you have 8 losses in a row, are you going to completely say, oh no, this strategy sucks, I'm not going to ever really have 50-50 and this isn't going to work, and you're going to abandon it and not do coin flipping anymore? Or are you going to let the data play out? So that's something to think about. Is inevitably, even if it's a perfect 50% win rate, that doesn't mean every other trade's a winner. It's not how the statistics work out.
It's a really good analogy.
Cool, guys. Well, Tim, I appreciate it. If you guys have more questions, hop in the Discord. Watch Tim stream. It's awesome. He streams every day, and he does all the brain rot memes, 6, 7, anything you guys need. He'll do. Just donate on his stream, I think, and he'll pretty much.
You don't even have to do that. I just do it.
Yeah, I'll just do it. Low barrier to entry on Tim Vesh memes.
We're there for the vibes.
Yep.
It's more of a hangout more than education. I like to just. I always say, like, the main reason I even started my stream was so that I could keep myself from making boredom trades. You know, that way I have someone to hang out with, and it helps me stick to my strategy, because then I can not have to worry about staring at the charts. Trying to find a trade. I can just talk to everybody else, see how they're doing, etc. Which, by the way, happy Thanksgiving to everybody. Happy holidays.
Yeah, happy Thanksgiving, and if you're not in America, hopefully there's a holiday that's nearby, and happy that. So, and on that, we'll end the stream.
Sounds good. See you, everybody.
All right. See you guys.